All right, welcome back, guys. Sorry, I had to cut it off there as my dogs came in the room, so didn't want all that stepping to get picked up by the mic. But this is perfect. We can pick up in a part 2 video right here. And we can go ahead and pick off with this question. Do you have any rules for staying out of trades? Example, it's below the blank EMA, so I won't touch it, etc. or stuff like that to help avoid bad trades. That makes sense. Yes, if a breakout is happening over the 200 moving average, I usually will not touch unless we can see a candlestick body holding over that 200 MA. So always be on the lookout for your 200 SMA. Is there always a 15-minute time frame used to identify triggers? No, trigger identification is happening solely based off of price itself, price and volume combined. So you can utilize a couple of programs that will pick up on buys and sells and tell you how aggressive or passive the buying and selling is happening. So yeah, volume and price itself, price action. Please teach us reading the tape. So this is more something that you're going to gain throughout experience. There's just way too many components to be taught in such a request like so. So it's more so of utilizing all these lessons that I'm putting out, combining them, and having consistency of trading every single day in order to better identify how movement is progressing, especially at that opening hour. Webull only has MA and EMA indicators. Where to find SMA on Webull? Webull MA is the simple moving average. I usually use the 3-minute time frame for scalping. Do you ever use the 1 minute or 5? I never use the 1 minute ever, except to identify opening strength, of course, on those first 4 to 5 minutes of the open. 5-minute time frame, yes, of course, utilize that for scalping, and you can even go up to the 15-minute time frame. But usually 5 is the sweet spot, for me at least. Need more clarification on volume confirmation because the current volume candle is not formed yet. So how do we decide if we're getting enough volume for the necessary breakout? So if you want an actual breakout and you're not scalping, then you don't want to go in on the first candlestick. You are in for more than a 20% scalp. So you want to get that formation and confirmation of holding either the moving averages or the key levels to enter. And usually, there's not a straight line up. And if there is, you will catch on with the momentum for your initial entry. But always you want to see how that first candle gets printed and then watch for confirmation of continuation. So that is why you need to wait for that first candle to form. How do you tell if a stock is strong and still get in early? Most of these times it's too late to get in for me. Again, brother, I put out this video last week, if not the week before, of how to identify opening strength. And I showed you 2 to 3 examples of getting in early. So take a look at that video. How do you decide when to scale out the last runners before a potential reversal? Thanks. So after your first trim, I always talk about setting the stop loss to break even. And then after you get to your second trim, then you're going to want to go ahead and move your stop loss up to that first trim's profit. That way you're always profiting, and you don't want to wait until it reverses all the way back into your entry and give up on 2 to 3 trims worth of profit. Then that would mean, let's say my last trim was about 100%. Am I really going to give up 100% of a contract and let it go to zero? No, my stop loss would probably move up to, 50% profit or so. So it's just the utilization of stop losses and moving them up, really. How to identify volume on breakout? Example, I am on the 5-minute chart. My trigger price is X. If the price crosses X on 10:31, the volume candle is now 5-minute candles, and I can directly compare it to the candles on the left. How do I judge good volume in such a situation? Of course, that's like I talked about early, then you would need to watch for continuation and not get in on that first candle if not enough indication is presented prior hand, especially on opens. How to avoid fake outs at the trigger level. Again, talked about that earlier, I believe, in part 1 of this video. What applications do you use for live trades when the market is on? I assume it's Webull, but do we need to opt for any special settings to provide more real data when market is live? So Webull's primarily what I mainly use, as not counting for option flow and dark pool data, but Webull and TOS of such are not good enough. They won't show you the urgency, as one of our top traders has stated. I believe we talked about even what you can use. Let me put that out in just a second. Here it is. Bookmaps, if you're on TOS, it's an additional $40 a month. Will give you a better tape reading of the buys and sells happening in real time. So if you want to utilize that, TOS is free. Just go ahead and add Bookmaps onto that, and you will get better reading. But as for me, it's primarily Webull, a couple option flow programs, and of such of that nature. Back to the questions now. Lost my place a bit here. Why don't you use EMAs and EMA crossovers? Any reasoning behind using only SMAs? Now, I do utilize EMAs, as talked about earlier. EMA clouds are good indications of continued momentum or continued trend in the respective direction. The EMA crossings are more so for signals of potential continuation into next days or next candlesticks, which is not solely my focus. I am a day trader. I'm in and out most trades within 30 minutes, 60 minutes. So it's not too urgent for me, but I will utilize it in slight indication, but nothing to actively trade on. Please talk a bit of trading mindset and keeping emotions out of trading. So many I see trade and claim they had diamond hands, when in reality, diamond hands is not trading strategy unless it's backed by a sound probability analysis. Also, please discuss price action and order flow as a trading strategy, specifically order flow. So the mindset aspect is centered all about risk management. Even if I had a perfect trade set up in front of me, such as this, let's say I had the 200 MA crossing flatten and I had the key level right here on the 669. Of course, we're seeing a clear direction up here after it crossed later on after the open. Now, even if I had this, if I only had one contract, but my account size was, I don't know, let's say 500, and the contract was worth 300-400. Even though I'm not taking on what many would consider big money, in respect to my portfolio, that's still a big position, and I won't be able to follow through with the full plan up. Now, what I can do instead is look for stocks not like Tesla. Look for something that has a cheaper premium that moves along with Tesla. For example, NIO. On most days they move together. So, and you could check out the options on NIO. I'm not going to pull them out right now, but it's definitely way cheaper than Tesla. So it's really all about picking and choosing around what you can handle as risk. If it's something that you can genuinely see go to zero, of course we're not going to let it go to zero because of stop losses. But if you can lose 100% of the contract, I promise you your mental calmness will be propelled and allow you to fulfill the trade the full way there. And of course, once you're in a trade, it's best not to spend the entire day monitoring that trade, go ahead and look at other stocks in the meantime. You already have your set stop loss, you already have your entry. There's not much active trading you can do after that. It's really all about letting the market do its thing, and either let your stop loss get triggered or take profits when happy. And of course, again, utilizing my script, I know whether or not the momentum is continuing to hold on, and of course moving stop losses up. All these things that we talked about earlier in the video help along with not panicking when a single candlestick goes down. Again, if your stop losses aren't getting hit, just let the trade do its thing. And if you can't let the trades do its thing, then you're already over positioned and you need to either pick a stock with cheaper premiums or put in a little bit more capital where you can handle 100% loss on that contract. How you went against the trend for Amazon. Can you explain golden trigger with the recent example? I went through this video, still not able to get a hang of it. Suggestion to take trades for small accounts. So I'm not really sure what your later two questions are, but how I went against the trend for Amazon, we can go ahead and take a look at that. So Amazon on Friday's tape, I believe I was utilizing the 5-minute time frame and the 15-minute at the same time. So first and foremost, I want to identify weakness right off the bat. We hit the highs in pre-market now and then just started dwindling down. However, instead of picking back up at the open at the lows of where we pulled back on the first candlestick breakout and over the initial resistance in pre-market, then I knew, okay, we had some weakness in Amazon. We're falling below key levels, but again, I didn't short this yet because the 200 MA support is curling up and I knew we'd have some sort of bounce. Now, the first thing that happens with Amazon is it formed a bear flag right here. So thus we played the bear flag down. And we see the bounce again over here. And now this is where we took our eyes off of Amazon and we said, okay, Amazon might break out. Weakness might subside here. Again, nope. Fell back below the 50 MA. And now we're just below that the entire time. And we can expect weakness into close. Same thing. We take a look at the 15-minute time frame here. We see in pre-market, the 50 MA was clear support. Now, the first thing off the open is we lose that 50 MA. Okay, second candlestick is already getting rejected off the 50 MA. So we already know we don't have enough bounce to reverse all the way up. We know this bounce right here, since already got rejected, is more going to be of a dead cat bounce. And we see now every bounce is trying to get pinned at the 3,300 level. Again, not holding up over major moving averages and the highs of pre-market. So we know any bounces are getting sold off over those highs. Again, we can get our stop loss up to highs of pre-market if you wanted to identify the weakness. If it closes over this level, then we know weakness has subsided and reversals can potentially start. But again, never got the close over, even this little doji candle that formed. And we just went back down and continued the weakness into close as we lost major moving averages. So just utilization of pre-market data and moving averages is going to be the central theme of day trading, at least in my strategy. Let's see. If you start off with a starter size, when you would scale into a full size. This is explained in my educational info. Just please watch all the videos. How do you set stop loss? By break trend line or moving average, pivot and strictly adhere to it rather than diamond hand and hope. So again, it talks about risk management of not diamond holding and hoping. If it's hitting your stop loss, you want to exit point blank. Even if it recovers after it hits your stop loss, hit your stop loss. So you gotta go along with your plan the full way out, and if you can get stop loss at your predetermined level, then you have successfully traded that trade to the best of your ability. That's just how it is. It happens with trading. Now, how do I utilize moving averages? Moving averages tend to be more so of magnets for price action. So if price is way too far from my moving average, then I know that it's time to trim, as it will start making its way down, hopefully off of low volume, and bouncing to continue the trend that it's working in. So if the price is too far from moving average, go ahead and trim. If moving averages are being lost, then we know then slight weakness is starting, and as we approach our stop loss, so that's when we start monitoring it. And if you can't let go of the premium between the moving average and the stop loss, then you can make an educated guess whether to stop loss yourself out early or not. How do you tell if the stock's good enough to have starters even though the level has not triggered yet? Again, this is explained in my video of how to identify opening strength. So most of these questions are by the same select few. Please, guys, watch my other videos before asking questions in our Q&A. Thank you very much. And I believe that would be the last of the questions. I hope you guys have enjoyed this Q&A. I'll get both of these parts out today and get us prepared for our weekly watch list for the week. Other than that, I'll see you guys for a successful trading week ahead. Thank you.